struggle to include trading activities in my daily schedule. I'd like to know how Peter does it or suggests how to do it. I'm not a full-time professional trader. That means I have a full-time job. However, at work, I can usually manage to have access to my trading account within 2 hours. Well, that means you're sitting in meetings or something. But I also have business dinners, small child, and boy, I'll tell you that from my grandkids, I'll tell you that's high maintenance, which I take care of, play sports and activities with friends. What's the right thing to do from a trading perspective when a breakout happens or an alert pops up when I'm doing these activities? That's great. That is a great question. Should I finish them and then go to a computer? Should I have my computer with me? Sneak out and do trading activities? Should I arrange my day? I have full time access to my trading computer. As far as I understand, Peter does not sit in front of a computer all the time. How does he manage his trading activities when he's at dinner or wait a few hours? Great question. Great question. Part of this is a person's trading approach needs to depend on a number of things. I mean, one, of course, is just, the mechanics of an approach that makes sense to you. But there's other things too. What's your risk tolerance? What's your day look like? What's your scheduling? What's your capability to get to a computer? If you have to get to a computer, what's your technology? What's your capitalization? These are all factors that have to be taken into account when you're looking at exactly how to trade. But I want to spend time on this because I think it's an important question. And here's my schedule: is I'm up at 4:30, 5 o'clock, but let's start the clock in the afternoon. Markets close for me. The late markets, S&Ps, the aftermarket gold, usually markets close up for a settlement price, in the afternoon as late as 3:15. And so that's when really my day begins. My day really begins on Friday, that's when I do the heavy lifting, Friday and Saturday, when I scroll through a couple hundred charts, weekly charts first, and kind of write down and get a long list. And I check them off and I throw them into a file. And it's my long list. And it's charts that catch my attention. It, of course, includes charts where I have a position. It's charts I've been monitoring that I might have orders in to establish a position, or charts that are particularly interesting for one reason or another, or charts that are developing where I say, hey, there's something that could be here. And so there's 25 of those. And then I go back through and I really scrutinize that. And I have another file that I dump everything into. And that's really the short list file. That may be only 10 markets. So that's really the focus of my attention for the next week. And I hope, it's my hope that I don't really have to trade outside of that list. There may be some things that come up. I see somebody else post a chart where I say, wow, how did I miss that one? But generally speaking, I want to keep my trading activities the following week to that group. And so let's say of the 10, really, I even narrow it down more and say, okay, there's 2, 3, 4 positions I have on. There's maybe 2, 3 markets that that have positions and patterns that are getting right, or what I refer to as mature, where, hey, something could happen. Like you're seeing the soybean chart right now. That's not a mature chart. That's a premature chart. It's not fully developed. It's awkwardly developed. It would not be on my list of 8 markets. Okay, so then Sunday, I look at markets again on Saturday, and I try to determine, okay, what's my position? Where am I going to have orders? Where am I going to start the week with orders? And I determine what those are. And first, it'll be positions I have on, where I say, okay, where I have target orders in where possible, like bonds, notes. I don't have a target order in. I have an alert in that registers the spread itself, but that is not a spread. It used to be a spread that you could trade on the exchange, and you could have exchange members carry that order as either a stop or limit order. You can't do that anymore, but you can as an alert. And so there I'll set an alert as to where am I going to get out if I'm wrong. And so, for instance, I'll go back to to bonds notes, where I know that it's 2001 premium to bonds. If I get an alert at 2001, I will blow that position at the market, no matter what the time of the day it is. Although I won't do it at night. If it comes to me in the middle of the night, I won't do it. But starting at 5, 6 in the morning, I'll be looking to exit that trade. I also have targets in where, in this case, if it hits a target, I'll get an alert and I'll cover the position because I cover positions at targets. But there are other things where I will use stops. I have hard stop, and now I'll either use a hard stop or a soft stop. I'll use either a 24-hour stop or I'll use a day-only stop. And so I have platforms that allow me to make those determinations, not on soft stops. Soft stops or soft entries for me are where I set an alert. And in fact, there are updates on page 1. I will list whether I have an entry order stop or whether I have an alert. And so an alert will go off where I know something is happening. I set alerts for my iPhone and my iPad. I keep them up, volume full on, where I always know. Now, they don't go off a lot. I must tell you that I may only get, on a busy week, I might get 4 or 5 alerts that I get beat. But that's a busy week. Normally, I don't. I can go an entire week without getting an alert that I've either reached the target, and if it's a target, I ignore it if I have a price in. Now, target orders are or better orders. I will carry those good till canceled 24 hours a day. I don't care if I can take a profit where I think I can take a profit. I want to be filled. It doesn't matter what time of the day it is. But on stop orders, most markets, I do not want to have open order stops working overnight. There are some markets I will have it, the extremely liquid ones. Now, bonds is liquid. If I had a bond-only position, I would have it. Gold is marginal, can be liquid certain times. But I'm talking about things like the cable, which is pound dollar, or the yen, or euro US, or markets like that are extremely liquid. And I don't mind having an active, hard working stop 24 hours a day. Now, so I don't worry about those orders, although so I get those orders in, and then what happens is that takes me about a half hour, 45 minutes. I get the orders in, and I basically then don't look at markets again until Monday morning when I get up, and I just review where the markets are, where I have orders. Do I need to adjust the orders? What's happened? Am I still good to go? If I'm still good to go, if it's a day order, I'll enter a day order at that time. For instance, if I were to buy soybeans on the stop, that would be a day order. So I'd enter it at that point. I enter it during the daytime hours, which in beans start, I think, about 7:30. I may be wrong on that. But I'll enter it on the platform as a day order, not an open order. Work during the day sessions. And in futures, you can find a listing of what the hours are for day and what the hours are for for non-day sessions. And so I enter those, and then I go play pickleball. I run errands for my wife. Now in Arizona, I'll help my daughter-in-law out. I'll do things like that, run up to school. Tonight, after this, I'm going to watch a concert. So I try not to really pay attention to markets during the day, although I will periodically come in and take a peek, but generally not. Now, the application for the question at hand, of course, is what time do you have? Do you have the ability when you get an alert to go immediately to the market? If you don't, you just have to assume you take smaller positions, where I may take 1 contract per 100,000 of nominal, let's say, in a soybean trade, 10 contracts per million. Maybe if I can't watch markets all the time, but I want to trade classical chart patterns, I'll cut my size back. Now, that cuts my profit potential back, but, hey, risk is commensurate with reward always. And so, at that point, if I know I can't get to a market during the daytime session, but at least I can spend a half hour in the morning and another half hour in the afternoon or early evening and can't get to a market if an alert goes off within an hour or two, well, markets don't run away. I mean, seldom do they. And so you just have to do the best you can in accommodating what it is and trade down in size. So, it's a mini contract of gold instead of a big contract of gold. It's a bond note spread instead of an outright bond position and that sort of thing. Or in the case of currencies, I prefer futures. But that in the case of the euro, that's 125,000 euros as a contract, and that's why for factor tracking rather than trading futures, I'll often trade the spot because you can size down, and so it all depends on what it is. But I could trade pretty much the way I trade right now if I limited it to 2 hours on a Friday or Saturday, another hour on a Sunday afternoon, 15 to 20 minutes each morning, and another half hour every afternoon, and then set alerts. And, if I can get to stuff when it goes off within an hour or two, usually you'd be okay. You're going to miss some markets. Some markets will run through you in that case. And, the best you can do rather than having had a stop in to enter an order, which is not generally my preference, is you got to stick in a limit order and hope the market checks back and you get some sort of minor retest on the downsized position. So that's a long answer to a long question, and I thank the first member ever of the Factor Service for asking that question, because I got a feeling it's a question that many of you have.